In this video, we're going to be going over a 2-minute scalping strategy that works very, very well. In fact, I took a trade with it this morning, and there's pretty much a trade opportunity every single day with the setup within the first 1 to 2 hours of the market open, sometimes the first 15 minutes. So this is an awesome scalping strategy that you can use to start consistently making money in the market. Now, the first thing we need to watch for is we need to watch for levels of interest with high volume the first 30 minutes to an hour of the market open. Okay, so the market opens at 9:30 Eastern time. I want to see where did we have a bunch of volume and either aggressive buying or selling the first hour. Okay, somewhere in the first hour. It could be the first 15 minutes, first 30 minutes, first hour. What that tends to be when the big guys, Wall Street, big banks, we call them market makers, right? They control the market because they have billions and billions of dollars they trade with. Me buying 10 contracts, 5 contracts, we're just little tiny ants, right? We do not control the pricing. So they typically set the standards the first 30 minutes to an hour per day, and we can trade off their levels, right? We want to trade where the high volume kind of occurred because that's going to make it so we know where to put our stop loss, and it's going to give us an edge, right? It's going to give us a higher probability if we know where the high volume levels are. Okay, so this is the first thing you really need to gauge. Okay, I'm going to explain all this, give you multiple examples, including the trade I took this morning, right? I made over $1,500 from it. So anyways, next thing is once we kind of gauge where that high volume levels are, the first hour, 30 minutes, then we need to see a pullback near the level. We need to see a 2-minute MACD crossing. We need to see a 2-minute Heikin-Ashi candle, okay? And then I usually set a 6-point target, so that's where I'll take my profits. This is on yes. And then I trim 50 to 80% of my position once I'm up 6 points. Then I like to trail the rest with a trailing stop loss, okay? And I'll explain how I do that. Now, again, this seems very complicated, but it's very simple. Okay, so let's go ahead and go into all kinds of examples. I'm literally just going to go to random days in the market, and I can show you that the setup plays out and it works day in and day out if you follow all the steps. All right, so let's get into this. Now, so the trade I took this morning, as you can see, the first 30 minutes or so, what we did was we sold off with decent volume, and then we started getting bought up, right? We're getting bought up, and notice the volume, like once we got down here, look at the volume, the blue candles, it was decreasing, right? So we're getting bought up on low volume. That means that, the buyers aren't that strong, okay? If we see green candles, but it's low volume, it means the buyers are pretty weak, okay? So it's higher probability to look for short setups, right? And then what happened? Okay, right at 8 o'clock, the first 30 minutes, we had big volume come in with all kinds of selling pressure, right? We created a huge red candle here. Okay, so this told me that this level should not get passed. Okay, so this would be a great level to put a stop loss somewhere above here, right? Where the selling got created. So this acts as a good place to put your stop loss, right? Somewhere up here. Because this is where all the volume got created, and sellers should be defending this level, okay? They originally defended it here when we tried to break out, and they should be defending it again, okay? And this also happened to be a level in our resistance area. I did mark this inside our Discord. If you join our Discord, right, I shared that in the last training. I post a trading plan every single day. So I said, today I'm watching for 5150 resistance area. If we look at the chart, right, this is literally where we went to. We can see that this is 5150. We went up just past it, and then we sold off, right? So anyways, going back to our setup, right? So I determined where we had the level of high volume interest, okay, which was this area right here. What happened, if I go back here, I want to see a pullback near the level, which, we're pretty much at that level. Then I want to see a 2-minute MACD cross, okay, followed by a 2-minute Heikin-Ashi candle. So I want to see these two things before I enter the trade. So if we go back to the chart, right, let me just zoom in here so you guys can see better. What happened here, right? This is the MACD. Right when we got this selling near that level, the MACD crossed, okay? So when this blue line crosses down to the yellow and these bars start changing from green to red, this gives us a short signal, right? And again, you don't want to just take this every time the MACD crosses, you don't want to go short, right? You have to put all the pieces together, okay? You have to see all this at once, right? So we just came off a level with high volume in the first 30 minutes to an hour, right? The MACD crossed right when the selling happened. And then I want to see a 2-minute Heikin-Ashi candle. And what I want to see here is I want to see no bottom wick if you're going long and no top wick for shorts. Okay. So anyways, going back here, basically just seeing a Heikin-Ashi in the direction that you want to trade with. So we can see the selling clearly happen here. We can see there was a white, or this also represents a red Heikin-Ashi candle. And if we look at this, there is no wick at the top, right? So this is a bearish candle. Once this candle closed, right, this is where I entered my position short, okay? So I was able to get in right at around 51.45. I could have got a little bit better entry at 150, but I got in at 51.45. And basically from here, right, I'm entering the market short because it showed the sellers were in control. That's where all the volume came from off this level. I had a 6-point target, and this is where I trimmed 80% of my position, and then I can trail the rest. Okay, so 6 point. So I entered at 51.45 right here. What's 45 minus 6? It's 39. So once we got down to 39, which is basically right down here, this is literally 3 minutes later after I entered the trade, I was able to take my profits. And 6 points is a solid trade, right? It doesn't look like much. This is a pretty volatile day, but it doesn't look like much, but that's a solid trade, right? If you consistently get, 6 points, 7 points, 5 points, 10 points, you're going to make really good money. Okay. So don't try to hit the home runs, right? Try to hit the consistent base hits, All right. The way you make a lot of money with trading is not by going for the huge trades, right? It's by consistent base hits, having a setup that works. And, if 6 points makes you $250, right? If you're trading with one contract, or $300, right? Think about if you were to use 10 contracts. Now that same trade is going to make you $3,000. Okay. So it's all about finding a setup that works, that you can prove you're profitable with, and then scaling your size, scaling how many contracts you use, how many funded accounts you're using. Okay, and I'll show you that in the next training, how to scale. So it's not about hitting big home runs. It's not how pro traders work. Maybe some people trade that way. That's not how I do it. Okay, I'm looking for consistent base hits. Anyways, that's where I trim my first position, and then I like to trail the rest. Okay, so I said trail the rest. So basically I trimmed 80% of my position. I have 20% remaining. Essentially, after I trimmed here, basically what I want to do is I want to see every time these Heikin-Ashi candles break the lows, I can put my stop loss above the candle. Okay, so my stop loss was originally above this candle when I entered. Okay, so this candle I entered on, so I always put my stop loss above the candle. Okay, so my stop loss was really originally here. Once we got this candle closed, I moved it to 150. Then I trimmed my position, right? And I trailed the remaining. So now once this candle closed, I put it just above here at 145. So basically I had a break-even stop loss. Then once we got this candle right here, right, this is where I trailed it again. And I put it right above this, this high on this candle. So it was at 142. So now my stop loss was in the profit. So I was guaranteed, to make money even on the runners. Okay. And then what happened here? We got this candle. It broke the lows. So I'm just looking for every candle that breaks the lows that doesn't have a wick at the top. I put my stop here. And then lastly, this candle broke the lows. It had no wick. I put it here. And this is where I fully got out at 135. Okay, so you kind of see how I'm just trailing the stop loss based on the candles that are breaking the lows and just putting it. So I'm just slowly riding with the trend. That's going to maximize your profits. Okay, and that's the whole strategy. It's very simple. So let's go ahead and move up the pace a little bit and just go to each day in the market. So I'm just going to go to yesterday now. And as we can see, what happened yesterday, okay? So we originally sold off a bunch, right? So we're selling off. And then what happened is I had a key level I had marked from the previous day. This is a key support area. So inside my Discord, we can see if we go back to yesterday, I had a key support area at 50.50. Okay, I wrote that down in the Discord. So if we go back, as you can see, we came right into 50.50. What happened? We got all kinds of big volume, right? So we can see the big volume in the zone. And again, we're just following the same thing. So levels of interest of high volume, first 30 minutes to an hour. What do we see, right? Right when this high volume happened, this is at around 8:10. So this is within the first 40 minutes of the market open. This is a level with high interest. And then we follow the next steps, right? We want to pull back near the level, which we pretty much already did, right? We're in the level when we pulled back here. We got the high volume. And then what happened from there is we look for the 2-minute MACD crossing and a 2-minute Heikin-Ashi candle with no bottom wick since we're going long. Right? So we look for a 2-minute MACD cross. As you can see, let's just zoom in here so you guys can see better. The 2-minute MACD cross right here. Okay. And we start getting these green Heikin-Ashi candles, right? So when the blue line crosses above the yellow line and these bars switch from red to green, right? This gives us a long signal. Okay. And again, we don't just want to go long just because it crossed. We want to make sure we saw the level in the first 40 minutes of the market open. We saw high volume here, right? So this is where we know where to put our stop loss. This will get protected. This will get defended by the market makers. And then we're looking for confirmations. So this is confirmations to actually enter the trade, the MACD crossing, and the 2-minute Heikin-Ashi candle. Basically, after we saw this candle close, or I think it was this candle close, this is where you would enter the trade. Right? And then you go for a 6-point target. So if you enter right here at 51, go for 6 points. So that's 57. So you would have been able to trim 80% of your position here. Then you can trail the rest, right? So every time we break the highs, we can put our stop right here, broke the highs, put our stop here, broke the highs right here. Actually, we broke the highs on this candle, put our stop right here, broke the highs on this candle, put our stop right here. And as you can see, your runners would have gotten out at 50.60. You would have made a little bit extra money on that trade, okay, trailing the rest. So as you can see, very simple setup, right? Very simple setup. Let's go to the next day. And actually, I'm not going to be able to go more. So if this happens, you can just go to settings, go to time axis, and it's only letting me go back 1 day. I'm going to go back 10 days. So we're just going to go back the past 10 days and show you that these setups happen literally every single day, okay? So let's go back to this day. This was on a big news day, so the market was more choppy, but this setup still worked. So this happened right when the market opened. As you can see, we got aggressive selling off this level. So I knew this was like the area I wanted to watch for shorts anytime we got up here. So basically, I saw this level of interest with the high volume, first 30 minutes. Pull back near the level. As you can see, if we go back to the chart, right, we eventually pulled back to the level. So this is the level that got created. Now we could have entered here because the MACD was crossing and we got this Heikin-Ashi candle. But that was like the first 10 minutes of the market open. So if you missed it, in case you missed it, you can always wait for the pullback again, the retest. And as you can see, we got it here, right? So just following the steps, pull back near the level. 2-minute MACD cross and 2-minute Heikin-Ashi candle. In this case, we want to see no top wick since we're going short. So we go back here. As you can see, the MACD was crossing right here. And we also had this 2-minute Heikin-Ashi candle. Candle closed right here at around 52. I actually did take this trade. This is the trade I took this day. As you can see, I wrote it from 52 all the way down to 6 points. Which is around that 47, 46 area. Okay. So anyways, that was the trade I took. And then my runners got stopped out on here. Since this is a very choppy day, there wasn't really any trend since we had news later in the day. So anyways, made nice trade on that using this strategy once again. Okay. So let's go back another day and we can see what happened here. This is like the first hour of the market. So we originally kind of came up here, and we did have resistance, up in this area at that time. As you can see, we kind of just stalled here for a while. And then what happened, right? We started getting aggressive selling, right? We started getting aggressive selling right here. This is right at 8:30. So this took an hour to form a level with high interest, with high volume. As you see, a bunch of volume came in right here. And what happened? Let me just delete these boxes so it's not confusing. Basically, we pulled back near that level. So going back to our system, we found the level of interest. We pulled back near the level. Now we want to see these two things, right? In this case, we're going to see no top wick. So 2-minute MACD and 2-minute Heikin-Ashi. As you can see, pulled back to the level, and we see the 2-minute MACD crossed, giving us a short signal, right? These bars turn red, this line crossed right here. And we also saw a 2-minute Heikin-Ashi candle with no wick at the top. So we simply entered the trade short here at 131, and we wrote it down 6 points, right? So we wrote this down to 25, which is right here. This is where we trim the position. We trim anywhere from 80 to 50% of our position. Then we trail the rest, right? So each candle that break the lows, right? We can put our stop here now. This candle broke the lows, we put our stop here. This candle broke the lows, put our stop here. This candle broke the lows, put our stop here. And this wouldn't have got stopped out this whole entire time until right here broke the lows. And then we put our stop at 112. As you can see, you went from making 6 points on this trade to now your runners just made you an extra like 15 points, right? Because we're trailing it. So this is why I do, the trailing strategy on, my runners, because I'm able to get a huge winner, right? Sometimes, some days, not always, but I'm able to get a huge winner once in a while, right? Just trailing it. Okay, it's a very easy, simple strategy that works really good, right? So you guys are getting the hang of this now, right? This is pretty simple stuff. Obviously this takes time to get used to, but we can go to another day and I'm just going to keep going through examples and go back test this for yourself, right? Practice this. What do we see? We see aggressive selling with high volume the first, few minutes of the market open. And what happened? We got a bunch of volume when we came down here, right? We can see the volume right here. Bunch of volume when we came down here. We tried to come up. Right now, you might be wondering, well, Chad, we got a bunch of high volume right here. It's within the first hour of the market. We came up, we got this Heikin-Ashi candle. Why didn't we enter the trade long right here, right? Well, because again, we want to see everything all at once. So we want to see a 2-minute MACD crossing, maybe a pullback near the level, and a 2-minute Heikin-Ashi candle. So if we look on here, when this candle got formed, what do we notice about the MACD, right? It wasn't crossing yet. So we waited for a pullback near the level. Then the MACD crossed, up here. So once we got this big Heikin-Ashi candle, right? This is where you can see I entered my position right here at 51.44. And what did we do? We ride it up 6 points, right? So we ride it up straight to 51.50. This is where I trim most of my position. And then I was able to trail the rest by end up getting stopped. I got stopped out right here on this pullback, right? Which is fine. Okay. Some days the trailing's not going to work as well. And again, we had high volume and high interest on this level too. So sometimes, during the first hour, we'll have 2 levels with high interest, right? With high volume. So same thing. We pulled back here. We saw a 2-minute MACD crossing. We saw a short candle. We could have got short off this, right? So this day, there was 2 opportunities to actually trade the same exact strategy within the first hour. So this is an awesome day to actually trade with. Okay, we'll go back another day. We'll just do a few more examples here. As you can see, on this day, this is where it gets a little bit more tricky. But basically what happened was the market opened here. What did we do? We pulled back to our level. Okay, so this is a level I had marked in our Discord group. And if I go back here, right, what happened was we had a bunch of high volume, right? Huge volume in this area. And then we saw the MACD cross right here and a Heikin-Ashi candle. So what did we do? We get in right here at 51.13. And then we write it up 6 points. Okay, so 13 plus 6 is 19. So we write it up to 51.19, which was right here, right near this VWAP. So we trim most of our position here. Then what do? We trail the rest, right? So once this candle closed, we put our stop right here, and then we wait for a candle to break the highs. No candle broke the highs until this candle. Now we put our stop in profits at 118. Then we wait for another candle to break the highs, which is this candle. We can move the stop up to 121. Then we move our stop up to 123. Then we wait for another candle to break the highs, which is right here. We can move our stop to 127. So you can see, guys, this strategy works so good. If you actually know how to read the market and you're following all the confirmations, you're not getting, you're not just looking at one thing. You got to look at all of it. So anyways, guys, this is the strategy. It works insanely well. Let me know if you have any questions on it inside the Discord community. Like I said, I share my levels in here every single day. I share my trade recaps, and you can also ask any questions, share the trades you took, right? Share your profits, share your P&L inside our group. Let's build this community. Let's all help each other out and work together. We're all on the same mission here, right? We're all on the same mission to get financial freedom, time freedom, location freedom for you and your family, right? We're all on the same